Well, greetings to all my clients. This is our weekly stock market recap. My name is Walter Measers, your wealth advisor and tax advisor. Just quick disclosure, this video is meant exclusively for my investment clients. For informational purposes only. It's not an offer or solicitation to buy or sell any securities or make changes to your portfolio. If anyone else is watching, please talk to your current advisor. Wow, what a week it's been in the stock market. Stock market continues to trend down. Friday wasn't a good day, an up day, but still overall markets pretty much are in correction territory, especially technology. And S&P touched upon 10% down, so technically that's correction territory. Anytime there's a pullback in the stock market, 10% or greater, it's technically called a correction, and we are in that phase. So what you're seeing on the screen is pretty much one day, meaning Friday, March 14th. Again, I'm comparing QQQ, which is technology ETF, SPY, which mimics S&P 500, and TLT bonds. So I'm just comparing two very distinct asset classes, stocks and bonds. As you can see, Friday, March 14th, the market in the morning was kind of trending, then it started to trend up and eventually finished up. Technology or QQQ up 2.4, and the broad market S&P 500 up 2.1%. So positive. But unfortunately, if we look at the last 5 days, the markets have been down about 2.3%. If we look at a month, again, technology in a correction phase, momentum. S&P not quite, but if we look at 3 months, again, technology got hit. Same thing with S&P 500, not quite technically in correction mode. But as you can see, the trend is really we're trending down. So again, our clients are out of the market. We're sitting on the sidelines. We're sitting in BIL, which is an ETF, U.S. Treasury notes, 1 to 3 months, paying about 4.3%. How long we're going to sit, on the sidelines, I really can't tell you. We follow trend. And our research company, Technical Traders, is indicating right now we continue to need to be on the sidelines. We really don't know which direction the market is going to go. Is it going to continue to trend down, or is this just a bounce and then we start really a longer term downtrend down? Again, nobody knows. These are probabilities. There's no guarantees, no certainties in the stock market. But if we look at 6 months, pretty much the market is flat. Long duration bonds actually would have been a very bad investment, down 2.2%. Why? I mean, the reason I'm showing bonds, because at some point we're going to get into a phase where bonds are going to be a good investment to get into when markets continue to drop. Why is that? If interest rates continue to go down, then long duration bonds will do extremely well. In 2020, long duration bonds had about a 15% upside, where the markets lost 50%. So that's where we're trying to kind of gauge, get into that next trend up, where long duration bonds are going to continue to trend up. They started back in July of 2024, there was a trend up, and then it reversed. And then again, in end of the year, started to trend up and went down. And again, February started to trend up, and March it's coming down. So still no clear direction. It's not time to get into long duration bonds. Again, we're waiting on the sidelines and see what happens. If we look at 5-year, the market did very well with some ups and downs. But again, if we look at the bigger picture, starting from 2022, the market was trending up. Unfortunately, right now it's trending down. We don't know if that's the start of a major correction. When I say major, 20, 30, 40, 50%. There's many predictions, probabilities. We just have to follow the money. And our research company follows institutional monies. And based on that, they're going to make recommendations or give us signals. Should we stay on the sidelines or start getting back into either the stock market if there's a definite trend up, or will it be time to get into other asset classes? And bonds will be one of them. Gold potentially will be another, and maybe inverse ETFs. So clients are asking, well, Walter, how long are you going to stay on the sidelines? I can't really tell you. It's tough to predict. But the 3 asset classes that we will be getting into, depending on what happens over the next 2, 3, 4, 5 months, is most likely long duration bonds. Could get into some inverse ETFs where if the market is trending down, that's a good way to make money and protect clients' portfolios. So let's just take a quick look on consumer overall sentiment. And consumer sentiment tumbles further in March with even Republicans losing faith. So what does that mean? Remember, the consumer represents 70% of the economy. And when consumers lose confidence, sentiment, meaning they're fearful that they could lose their job, they're fearful of inflation, prices continue to go up. So as you can see, the March Consumer Sentiment Survey for the University of Michigan registered 10.5% drop, following a pretty severe drop in February. So these are not good trends. Is that going to continue? Again, the consumer is running out of money. And the big one is really wages are definitely not keeping up with inflation. So that causes lots of uncertainty. So what's causing the stock market to really go up and down and really trying to find a direction? Stock markets hate uncertainty. And there's tons of uncertainty right now. The consumer, you've got geopolitical issues, Russia and Ukraine war. Trump's tariffs, he's trying to bring Europe and other countries to the table to level the playing field as far as tariffs. Remember, Europe, China, Canada have tremendous tariffs on our products that we're trying to sell into their marketplace, especially Europe on cars. So what Trump is trying to do is really reciprocate, says, hey, you have high tariffs on our goods and services that we're trying to sell into your market. So we're going to reciprocate and say, okay, until you bring those tariffs down, we will reciprocate with higher tariffs. And this has been going on for years and years. This is not over the last year, 2, 3 years. This has been going on for over 10 years, where the United States has been getting the shaft when it comes to unfair trade, tariffs, really, by foreign countries. So we just have to wait and see. Again, at this point, we're sitting, waiting for the next trend, either trend up or trend down. Our research company is saying there's a high probability that there could be a bounce for the next maybe week, but once you bounce, there could be a pretty significant pullback. Again, these are probabilities we don't know for sure, but I'd rather sit on the sidelines, collect 4.3% of interest for our clients, and then make a decision based on probabilities of which direction the market may go, either the market or the bond market. So give us feedback, see what you think. Are these too long, too short? Also, let me know what other topics you want me to cover. So hopefully this was helpful, and we will see you next week. Take care. Have a great weekend. Bye now.